So I'm here with Mr. Troy. Mr. Troyman is our branch manager. Okay?
Hi.
What we're going to do today, we're going to talk about the reasons that other mortgage companies advertise. Well, advertise.
I did Forrest Gump.
I shouldn't say advertise. They have websites, blogs, whatever, dedicated to the reasons why you're going to be told no when you're applying for a mortgage, and our branch doesn't have anything like that, correct?
We do not.
Okay. Our branch. He's laughing at his Forrest Gump thing. Our branch doesn't have it because we don't want to prep you guys for the idea that you're going to get told no. We want to actually find ways to tell you yes. So we're going to look at the reasons why they say you could be told no for a mortgage. And so, yeah, let's just jump into it. One of the first reasons is that a credit score is too low.
Who says it's low? What's low?
Let's say it's a 580.
No, not low. It's lendable low.
It's lendable.
Lendable low.
Okay,
let's call it that.
Low. All right, let's go with debt to income ratio is too high.
Well, what do they call high? A lot of lenders will clip at 45% or 50%. In what program? Is that an FHA?
Right. FHA so depending on the home loan that they're trying to set you up with, your DTI could be too high for that particular home loan, but if you have a need, want, or desire to move, then you need to consider some other loan options, or make sure that that loan officer is using their experience to determine what's impacting that debt to income ratio, what can be pulled out, what doesn't need to be paid attention to, yada, yada, yada.
Use your tools, man. Come on.
Toolboxes.
Listen, we are alternative lending.
That sounded like a 90s band, alternative lending.
Look, man, I'd look good in leather. Anyways, move on.
All right. Loan to value is too high.
That doesn't make any sense because if it's a purchase, there are requirements for down payments and you have to meet that percentage. So if it's a conventional and you're a first-time home buyer, it's 3%. If it's FHA, it's 3.5%. You meet those guidelines, your LTV is not too high. Hello?
And as a side note, if it's conventional and you're not a first-time home buyer, it's 5%. I just want to do it too.
Is that kind of like a high 5%? No, leave me hanging? Thanks.
Oh, wait. Oh, we were doing high 5?
I was, but no, high 5%.
When our powers combine. All right. Your employment status has recently changed. Now, depending on this one gets a little tricky. Depending on what you're doing, how it's changed, things like that, that could potentially pose a problem. But the reality is, we do still have solutions for the majority of those situations.
All of them.
There's solutions.
That's right.
All right, we're gonna move on. You have this one's super vague. You have unusual bank account activity. Right?
What's unusual? What does unusual mean?
Because things. It doesn't even. Okay.
What?
Okay, it's in reference to cash deposits. Okay, and are there not necessarily workarounds, but there are things that need to be looked into.
Alternative solutions. I'm going to bury that term. Yes. So if the deposit is 50% or less of your income,
good to go.
Good to go. Don't care. But
depending on the amount of the deposit, it needs to be considered. Okay? So unusual bank account activity, that's vague. Don't let somebody tell you no because you have unusual bank account activity.
Tell them what it was. Did you sell a car? What'd you do? We'll figure it out. We'll come up with a solution.
There are problems with the property, an equally as vague one, because that doesn't really address things. The one thing it does talk about is if it's an FHA loan, you're going to have a harder time getting the property approved. I don't like that.
Baloney, nah.
I don't like that, guys.
Nah.
We need to stop this whole FHA bad.
FHA's good. So FHA doesn't like the peeling paint, okay? Reason being is back in the day, paint had lead in it. Okay, kids would eat the lead. Not meaning they would pick up a paint chip and eat it like a potato chip. That's not what I'm saying. But when they're little and they're teething, okay, maybe I did a couple. All right, it explains a lot. But my point is this. So if the eaves are peeling, that's got to be painted. Can't have electrical wires hanging down. Can't. Maybe the people took the light fixture because it was their favorite chandelier. Whatever. Wire nut the wires, stick them back up, put a plastic 15-cent cap over it, call it a day. FHA is okay with that. Can you have a broken window? No, but who likes broken windows? Nobody.
I think just in general, the idea that because you're using an FHA home loan, you're not going to be able to get the property approved is a really false way of thinking. And
that's a bad message.
People need to stop sending that message out.
That's a wrong message.
I don't know if you guys saw my face got really serious halfway through Troy's conversation there. Because I was thinking, and I was like, it's so annoying how many times we've seen people reject an FHA offer just because it's an FHA offer.
Tell me no and watch me puff up. Because I love the word no. It motivates me to really just say, watch this, buddy.
Okay.
Sorry.
Ready for the last one?
Okay, lay it. Come on.
Now, this one I'm actually going to say could potentially have a challenge for your home loan. Recent missed mortgage payments.
Well, what's your definition of recent?
Within 12 months.
Oh, well, like the 11th month? Because if it's like the 11th month, okay, I'll get the loan started because it takes about 30 days, and by the time I'm ready to rock and roll, now it's 12 months, and
right.
What do I care, right?
And that's good to go at that point.
Yeah. What if it was 2 months ago? Ooh.
But here's what's going to happen, though. If it was 2 months ago, we're not just going to say, hey, no, you can't do it. Come back to us in 10 months, because that doesn't do anything to better prepare you.
Yeah.
How's about we go through everything? We look at the credit, we look at the income, we look at the debt, we look at every factor.
Why was it late, though? Were you affected by COVID? Because if you were affected by COVID and you had an arrangement, a forbearance, or some kind of program with your existing lender that shouldn't have reported you late, then we need to help them.
Okay, so that's a good point.
Yeah.
That is a very good point. All right, another thing, if for whatever reason the late is something we do have to pay attention to, we're going to take a look at everything in the meantime. We're going to give you a game plan so that when you, let's say it is 2 months, when those 10 months pass, as that 10 months pass, we're going to help you, we're going to take a look, is the credit in the best possible position? If not, we're going to give you a game plan to get it in the best position, okay? How much money do you need? We're going to tell you everything about that, so that way, as you're waiting for that time to pass, you are becoming a more qualified, a more prepared, and a happier buyer.
All right, what's the next one?
That's it.
What?
Yeah, they hit us with
No.
They hit us with those. I mean, we could find more. Realistically, like I said, every mortgage company has some kind of webpage or blog dedicated to why you're going to be told no.
Do you know how many times I want to send thank you notes out
to people, to lenders who say no?
That say no. I'm like, hey, thanks for saying no. We said yes.
Right?
I like it. It's just.
I would love to get like your truck vinyl wrapped with just like a giant headshot of your face. And it's like that, and it's like, we said yes.
We say yes.
So that's it, guys. We hope you appreciate the information in this. If you do us a favor, share it with somebody you think could use it. Share it with your realtor friend. Share it with your cousin who said they want to enter the housing market, whatever it may be. Find somebody that you can help by sharing this information with, because for every person out there that gets told no, we want to find a way to tell them yes. So that's it.